the main focus is on the big three, but what are some of the economic sort of trickle-down effects that we will then sort of see broaden out to the rest of the economy?
Yeah, that's such an important point, because I think some people all over the country or the world, they think this is just a Midwest problem or a Michigan problem or just a factory worker problem. Or it's not. I mean, obviously there's impact everywhere. There's obviously on the auto side and the manufacturing side, you've got supplier plants that are sending parts to these assembly plants, and then the dealers, of course. But if the strike then goes beyond just the Detroit Three in terms of the supplier base, it could start impacting Toyota and other transplants production. That impacts dealers all over the country, not just Detroit Three dealers. Then there's all the other businesses you don't think of that really have nothing to do with the auto industry, other than auto plant workers frequent these businesses. That could just be something as simple as the pizza joint or the bar where people get a dinner or a beer after their shift. That business just dries up. Plants are in communities. Obviously, communities have all sorts of merchants, schools, teachers, and whatnot. It's much more interdependent than people think.
And I think that's important context to add there, because as people are looking at this, and as we look at the proposals from Ford and from GM to the UAW here, I mean, the UAW is not going for it. And as you note, neither side has really a good reason to capitulate at this point. So where does it go from here? Who ends up blinking first?
Yeah, that's a question worth many tens of billions of dollars, because honestly, this isn't just about wages. I think it's important people understand that. Normally in a strike, it would just be probably about wages and maybe one or two other key issues. This is about many key issues, some of which I think you've got a graphic here on the screen. But the big ones that are a real problem are things like being paid 40 hours for 32 hours of work every week. That would require a massive headcount increase just to keep output the same, and then reopening the pension plan and reopening retiree health care. That is, per company, that is tens and tens of billions of dollars. And that's why you heard Ford CEO last week, Jim Farley, take the unusual step on live television to say, if we agreed to the 2023 demands 4 years ago, we'd be bankrupt now. I was really surprised he said it, but I think that's the magnitude we're dealing with here.
So then, David, when do we start seeing some of this action here show up in earnings? At what point will we start seeing that, given that it is still only day 4, but they're still very, very part on agreeing on this?
Yeah, and I do think the strike is going to last months. I mean, I very much hope I'm wrong. I hope they get an agreement as soon as this week, but I doubt they will. They're so far apart on so many issues. And then the financial impact here, people always ask me, well, what about the inventory that is already there? How much stock do their dealers have? That's actually totally irrelevant from an accounting perspective for the automakers' earnings, because they wholesale to dealers. So the moment that factory isn't producing vehicles, the moment it's not shipping vehicles, there's no more revenue coming in on the automaker side. The dealers, of course, have some inventory, but the inventory at the dealers is down across the Detroit Three relative to the start of in late August of 19, relative to the 40-day strike GM had then. Inventory is 39% lower. It's about 46% lower at GM alone, but across the Detroit Three, it's about 39% lower. So we're still recovering from the chip shortage. So I've seen a lot of stuff lately about how inventory it's actually good the strike is happening because inventory is getting too bloated. Those people are looking at day supply. They're not focusing on the absolute number. Inventory is still too low.
So then of the big three, in terms of who's perhaps best protected or who can perhaps survive the strike longer than the others, who's best positioned in terms of that, and also the economic impact that it then has?
If you're just asking among the Detroit Three, I mean, the liquidity here is outstanding across all three firms. And I don't cover Stellantis, but they did have over 60 billion euros in liquidity, industrial liquidity at the end of June. I do cover GM and Ford. Both had really high liquidity at June 30. I think it's around 25 billion in automotive cash at GM, 29 billion at Ford, and total liquidity at GM and Ford combined is about 90.1 billion at June 30, with 51 some billion of that at Ford. So you have to do a lot of math here on how long can and you have to make a lot of assumptions about how long, what's the minimum cash to run the automaker's business, how long can they last, and then conversely, what about the UAW strike fund which was roughly $825 million at the start of this? Honestly, given the size of the liquidity here, I think the math is on the automaker's side, but nobody wins financially. This is going to hurt very badly. It's just a matter of how long does it last.